Successful entrepreneur and lifelong veteran in the digital content innovation space, Rob has co-founded several groundbreaking marketing boutiques since 2006. After 17 years of scaling and expanding, he is laser focused on crafting intelligent strategies and assembling key talent to empower brands to grow. With almost 2 decades of experience working with leading financial brands, the likes of JP Morgan, E-Trade, and PayPal, Rob is honing his command of the investing and fintech landscape to supercharge challenger brands like iFlip during their most crucial growth stages. iFlip is an AI-driven investment platform that allows you to participate in the stock market the way that institutions and billionaires do. Their proprietary AI determines when it is the best time to buy, hold, or sell stocks that you're interested in owning. They use their AI to determine when it is statistically in your best interest to be invested, so you're not invested when a significant drawdown is likely to occur. Please welcome Rob Simone. Welcome everybody to Money 911. Today we're really going to get some great healthy money conversations going, and you heard the fabulous intro already. We have Rob here, and Rob, go ahead and tell us a little bit about yourself so we can talk about iFlip and all the different conversations of what is going on.
Hey Kris, how's it going? So I'm a growth marketer with over 17 years of experience working with financial platforms, fintech platforms, both traditional and non-traditional. And during that time, I've really spent most of my day-to-day understanding the landscape and understanding the tools that individual investors have available to them in order to kind of get where they're going over time with investing. I've also had the benefit of being able to work with some really amazing challenger brands, brands like iFlip, who are innovating the space and using a new approach, something I think is pretty incredible to really help people avoid some of the big mistakes and to bust some of the big myths that exist out there. And I tell everyone that I know in my family and among my friends and among my colleagues about the products that I work with and the lessons that I learned, because I think it's that important for people, young, middle-aged, and older, to really understand what's going on.
Exactly. And that's exactly what I talk about all the time. You go to school, you learn how to make money, and what do when you get out of school? You go make money and give it to somebody else, right? To manage to gamble because you have no idea. Now,
Yeah.
it's really important that people understand we are in the AI world. So when you go pay the big fees to the big brokers that are going to do all these investments, they're using their magical AI, right? And you're
Yeah.
you're paying them. And and the fees are crazy, right? When you go to, all the big names, right? What
Sure.
is it, like 3 to 5%, all the broker fees that are inside of there to manage
Yeah.
to talk?
It can certainly add up. And I think, I am by no means an advisor or a licensed financial planner, but I am an investor.
Hmm.
And I think that when you really analyze it, to your point, and you look at what it costs to hire an advisor, plus the loads and fees that are associated with the individual funds on the back end and the commissions that might be associated with them, it can take a huge chunk out of the money that you plan to use for your retirement or for that dream home or that college expense. And so there's a time and place for different things. I'm not saying that all conventional advice is bad, and I follow some of it for sure. But we're told a lot of things, to your point, when we get out of college. We're told a lot of things when we get into the working world and the onset. And the world has changed quite a bit. So it's really about awareness.
It is about awareness, and people need to take time to learn about this because, it at different ages, there's certain amounts that you want to put at risk, and there's some that you want to get safe. And
Yeah,
everybody knows that I'm on the safe money side, but I open this up to all of my listeners because a lot of them are younger and do have a longer time where they can
sure.
use the advantage of an AI system to
Mhm.
track that and get the high results. And
Being a young investor is incredibly powerful, right? To your point,
Mhm.
and I think that you have time to make some mistakes, and anyone who gets where they're going is going to make some mistakes with money, right?
Yeah.
And traders, right, who become successful traders make a lot of mistakes before they figure out how to do it day in and day out. But for an investor, the time is your ally, right? Where in other places, time may be the opposite of your ally, but as an investor, it's your ally. So the earlier you get started, that's great. But are you starting with the strategy that makes sense for that full long-term ride? And if you're an investor who's more like me, you're in your 40s, you're starting to say, okay, well, the economy is very different than it was when I graduated from college, and then 10 years later and 10 years later. So it's probably time to take a second look at your strategy to make sure that for the next 25 years or the next 20 years, which is a really important time period, 20 years, 25 years are incredibly important time periods for investors, to make sure that you really recalibrate it to weather at least the next few years where we're going to see a lot of volatility.
And this volatility and where we're at with the banks and on the BRICS
Mm-hmm.
and all of this, the global, principalities that are changing, this is
Sure.
not something that that we've seen before, like this, the sequences, the setups.
Yeah.
And you do need if you're going to play in the market, you do need an AI kind of a higher end to to sense what's going on to get ahead of it. Cause
I
right?
think what you're alluding to is protection, right? Like you need
Yes.
protection.
Yes.
And let's talk about that for a second, right? Because AI is what we're seeing with artificial intelligence and machine learning now is incredible. Um, but if we even scale it back to something more fundamental, right? Most 99.9% of individual investors don't have any sense of or any type of portfolio protection or real risk management in their portfolio. And having an advisor is not having more than a person who's diversifying really, and making sure that your strategy is aligned with what your life goal is. But there's no time and place where they're taking you out of harm's way, right? Unless you're telling them specifically to do so. And frankly, they will probably try to convince you not to do that. It's not something that's built into individual investors' strategies. But if you look at professional investors, institutional investors, hedge funds, products that the way that banks invest their money, they use sophisticated tools and technology all the time in order to manage their investments. Like we can't possibly believe as people that somebody who's investing money on behalf of Deutsche Bank or Bank of America or anyone for that matter is just buying and holding blindly
Right.
forever,
Right.
right? Like that, why would we have professionals do that when individuals can just do that? So if they have tools available to them, algorithms, predictive analysis, artificial intelligence, people with doctoral degrees, right? Why shouldn't individuals have similar tools, at least to some extent, that can help level out the long term curve? Not make it perfect. Nobody has AI is not a crystal ball. It doesn't get it perfectly right all the time, but it should be better than just buying and holding indefinitely in a volatile world. We're not going to see what we've seen in the past all the time.
That's it. And when in my dad's day, he was born in 1919, and he did really good with the stock market, and he was a genius. Einstein was one of his teachers at Caltech. So, but
Wow.
that's how I was trained. But
Mm-hmm.
in that shift, the market shifted. I got into the safe money side, and over 33 years, really, people would come in, over 6,000 clients. It shocked me how many people. I go, well, where's your 401k? Where's your IRA? And they'll name, oh, Merrill Lynch or, Schwab or some big company. I go, but where is it? Well, it's an IRA. And they're so embarrassed because they don't know where their
Yeah.
money is. And it's like, you just put it there and forget about it. And then I'll say, did you look at it recently? Oh, no, I don't want to look at it. Because there's so
Yeah.
much fear around it.
You're
And
100% right.
and manipulation and manipulation on what the media and what's being told to them. And
Right.
you have the hardworking American, that is playing by the rules and trying to be a good person and invest for their kids and the college and the retirement. It's really a changed world really fast, don't you think?
We're not built for the type of stimuli that is thrown at us on a
That's
regular
right.
basis
That's
from, by the media,
Yeah.
and forget about the larger media in general, but just the financial news, right? And what is available to us on the daily basis. We're just not set up behaviorally to process that. In fact, there's a wonderful book by an excellent behavioral doctorate, a guy named Daniel Crosby. It's called The Laws of Wealth. He's got a series of books that are associated with this, and his simple lessons, and I'm such a huge fan, just around how we're not designed to invest the way that actually is successful. Like, as human beings, we're designed to make the same mistakes over and over.
Right.
And you need tools to avoid making those mistakes. The biggest mistake you can make, to going back to that story about your dad, right? The biggest mistake you possibly make is not investing, right? You cannot save your way to retirement in America anymore. You will not afford retirement, unless you are the 1% of the 1% who has some sort of generational wealth that is you're inherited, or you have some massive business exit. You just can't do it as the hardworking American. You have to invest. So when you invest, though, you have to avoid the big mistakes. Buying and holding, right, works over time. You will, if you have the benefit of 20, 30, 35 years in the market with a index strategy, right, that is either built for you or that you're smart enough to build yourself, and it's relatively diversified, you will not lose, right? You will not lose over 20 years. There has not been a period in the last 100 years in the market where a 20-year period has been a loss. But I believe personally, it's 2023 and there's a better way, right? We can do better than not lose. We
Right.
can actually enhance our investment strategy by using the technology that professionals use. That's that simple.
Exactly. And there's not one person that I've ever heard of, right, or read about that's timed the market. I've created this safe money blueprint. This is the same strategy that thousands of my clients have used to feel secure about their financial future. And you can get it free at healthymoneyhappylife.com/blueprint.
I wouldn't advise it. I would say that, like, professional traders who are excellent, the best in the business, have enough losses in their career to say that that strategy is not advisable for anyone who hasn't committed their life to learning how to actively trade. So it's not really about timing the market. It's about, in my mind, and in the mind of iFlip, it's more so about getting out of the way of danger, right? So, like, when you think of timing the market, people think of grabbing that stock, IPO, or something that some, really smart trades in and out, and they're getting huge gains. And we saw all of this through, COVID, when people were trading meme stocks and when people were jumping on all kinds of crypto gains. And people got used to these big, over glorified wins that they had. I think timing the market is a misunderstood principle. I think what people need to think about is protection. They need to think about
Exactly.
being out of the market at the worst times, or stopping the bleeding as early as possible. And I think most people, unless they've really kind of read about this, don't understand that it's way more important to miss the 10 worst days in the market than it is to be in the market during the best, absolute optimal days. And that, you spend more time recovering from crashes and down markets than you do, actually trying to chase after these big up days. So risk management, portfolio protection, is the secret to long-term wealth. And so I would never want people to think that I'm advising some sort of like opportunistic day trading, time the market strategy, or that iFlip is a tool that does that. It's very much a long-term optimized investing platform that helps avoid danger, really.
Right. And in the balanced portfolio, what I talk with my clients about, I have safe money. I have tax-free income for life. I have, things that are 20, 30 years old down the road. And then you have
Sure.
your money that you're going to hedge and bet, right? What you want to
Right.
grow. And so
Right.
most people think that it's so time consuming and, I don't know about this and I got to research this and right. It's
For
only
sure.
for the professionals. And I think this is the edge and why I open this up to my listeners that iFlip is so cool because it's for the people. And the
Yeah.
price, getting into it is easy. It's not some big cost thing. It really
Yeah.
is allows the average person to get into that without having to go into the big corporate giants, right?
You
Anyway,
raised two really important points there, right? The first is simplicity. Investing, if you were to participate in a 401k plan, like participating in the plan is not complex. The complex part is trying to figure out if you're in the right funds and how much you're paying, right? And over the long term, when you need to rebalance and so forth. And it's a headache that I think that people really shouldn't have to deal with anymore. We're too busy, right? I'm busy, you're busy. We're we're not investors professionally, we're professionals. And so I think there have been a massive, amazing innovations in with respect to simplicity. Things like robo-advisors are great for managing your strategy over the course of a multitude of years based on what you're trying to accomplish, whether it's retirement or a major purchase. And they handle the asset allocation for you. They handle the algorithmic part of investing for you to tell you if you put this much in, you should end up with this much when you're 65 or whatever age you're tailoring it to. But they have, the robo algorithmic investing platforms. They have a cap. They have a limit for how good they are at actually achieving those goals because they don't take you out of the market. They don't avoid crashes or down days, and they don't use artificial intelligence, despite what people might think.
right.
They might be marketed as artificial intelligence, but they're just algorithms, which means they're just
Mhm.
following rules. And that's good. It's just not good enough. So when you add something like artificial intelligence into the equation, you get the best of both worlds. Super simple to use. You're really just setting up a core goal and a time horizon and contributing it to it and watching all of the brilliant sort of optimization along the years. And then you get the low fee association with not using an advisor or not using an actively trading human being that you have to pay a large fee to. So unlike any other platform that I've ever seen, iFlip charges a flat subscription fee, super transparent, a monthly fee, just like when you subscribe to an app. And that is very different than percentage-based AUM platforms or percentage of money invested or any of these other models that can get really hard for you to analyze over long periods of time.
That's really interesting, and I'm not any pro at any of this algorithms and AI and all that, and how you distinguish the difference between the algorithms and the AI, and
Yeah,
y- and what brokers are using in the big companies. I've never had and I have thousands of clients, never had any other brokers call them. Very rare, maybe a small percent. Okay,
right.
time to get out of the market. They just sell and they're gone. And the people are sitting there, they don't even know what they have. And nobody's telling them, now get out. But
Yeah,
that's why I like the AI because it actually was signaling what I was saying. Get safe, stay safe right now. It will tell you, right, where
for
to
sure.
go. And what kind of have you guys got like stats or how well it does in any kind of, head to head performance? Did you get that far on that?
Oh yeah, for sure. So I think there's two things you look at. You look at protection. So how does it protect
Right,
investors? So,
right.
if you were to analyze iFlip specifically during the last 5 or 6 market crash events, right? And crash event being something substantial like we witnessed in during COVID, at the onset of COVID, something that we would have witnessed several times in the last 2 decades, the Great Recession being included in that. Um, iFlip has saved customers, individual investors, on average 24% as a
Mhm.
result of protection during crashes. It's a huge amount of capital that investors don't have to recover from over the long term, right? So
Right.
you're avoiding most of the carnage and you're coming back into the market at the most optimal time that can be predicted by the software. Again, not perfect. It's not, it's not a wizard at
Right.
every single moment in the world, but it's so much better than someone who's just buying and holding. And to your point, we should talk about the reason why an advisor, for a couple of reasons, but the main reason why an advisor is not going to call you up and advise that you get out of the market is because they know that if you have the benefit of time, right? And no advisor wants you as a client for 1 year. They want you as a client for 20 years, 30 years. They want your kids as clients as well. If you have the benefit of time, you will come out ahead. And when your money is out of the market, they can't charge a fee. So it
Right.
is in conflict with the business model. And you have to ask yourself, while I am not an enemy of advisors, and I know a lot of great advisors who do amazing holistic planning for families, from the standpoint of pure investing, especially for people who are not incredibly wealthy, right? They can't really justify taking 1% to 3% of their assets and pouring it into fees because they're trying to grow wealth.
Right.
It's not the best. It can't be the best solution. Just can't be.
It was such a good point. And as an individual, just people how busy they are, and the workloads that everybody has, it does take that off of people because right, they don't have to learn all
Yeah.
this stuff and be paying the broker. I mean, they're making money when they move your money. They make money when they just hold your money. They make money, constantly that you don't. And a lot of those those fees aren't even shown in your statement. It's built
It,
inside of it, right?
it can be really difficult. And I've worked with many financial professionals on the brand side, whether at a big bank or a big investing house, that have absolutely confirmed the fact that a lot of the language that exists out there is overly complex on purpose. And it is just over engineered
Yeah.
to make it more complicated for the individual to understand and succeed. And if you're not a finance nerd like myself, to some respect, like you will never ever have the time or the interest or the passion to dive into understanding what is happening under the hood. And
Yeah.
so again, I still think it's better to invest and to invest with a professional or a professional platform than to sit on the sidelines. 100,000%. And the data shows that.
Hmm.
But if you're not incredibly wealthy, right, and you have holistic estate wealth planning needs, if you're a person like me, or you're a person starting their investing journey, or a person who's worked hard their entire life to save for the retirement they want, you're probably paying too much in fees, and you're probably not getting the most optimal solution. And it's time to take another look. It's 2023.
That's it. Time to take another look. And and the myth is that if you miss out on the market's best days, and forget it, you'll never outperform in the long run. And I think you
Yeah.
can beat that, right?
Yeah, I mean, look, if you have to recover from if you have to tolerate in your portfolio
Yeah.
every crash or every bear market, and of course, an advisor will price those markets into your long-term plan, but they'll
Mhm.
still have you weathering them.
Right.
If you as an individual, especially one who has a smaller balance, right, and is trying to really get it going, if you have to weather every single one of those events, it's like you're trying to run a race, and every lap, for half of the lap, somebody's pulling on you with a rope and slowing you down. And it's just, I would have, years ago, 10 years ago, 15 years ago, I would have nothing to say to that other than you got to kind of stay the course. But I don't feel that way anymore. And I don't feel that way anymore because I've experimented with enough tools to understand that you can enhance that strategy, and you can do it with tools like iFlip.
I think that's so cool. iFlip is cutting edge. You guys are like one step of the big wave that's rushing in, and that's why we want to get it out to a lot of people. Um, Just on a side note, that people can go to iflip.com/money911 and get in there and read about it and
For
find out
sure.
more. So
For sure.
the truth is, the stats show, right, that being out of the market on the worst days is more important for your portfolio performance than being in the market on the best days. Why don't you unwrap that one a little bit?
Yeah, the common myth.
Hmm.
Again, going back to what we said, people chasing gains but not really
Yeah, right.
properly protecting against danger and losses. In fact, years ago, so many years ago, I heard some really sophisticated traders talking about their strategy for actively trading and this idea of removing emotion from the equation. And so, like a lot of your trades are losses. It's not about being upset about the losses, is about knowing when to cut bait. And if you cut bait successfully, you're going to essentially do much better over that course of the year of trading. The same thing applies to investing, except that instead of you managing it individually, right, you can use tools and a platform to do that for you. So it takes you so much more to recover from down percentage wise than it does for you to step out and tolerate a small loss. Like from a numbers standpoint, we're talking about people who are down 15, 20, 30% because of what happened in 2022 that are now they're saying, oh my God, like I need to change brokers or I need to change platforms or what the heck happened. Um, to recover from a 30% loss in a portfolio, you know what kind of time horizon and contributions you need to make to dollar cost average your way back? It's not,
Yeah, no.
it's really not acceptable for the advice from professionals to be just keep calm and carry on. It's not acceptable.
Right.
And I think that in the future, what will happen is the type of risk management and protection that is built into iFlip, at least to some extent, will be built into most platforms that are individual investing platforms, like the Betterments of the world and the TD Ameritrades and the Fidelities. All of those investing platforms will eventually have some semblance of portfolio protection as a product feature or an innate part of your investing account. It's just not yet. But it won't, just like the world has gotten used to lower commissions or free trades, right? And lower and democratization in general. Like you can buy real estate through a democratized real estate platform or fine art or
Mhm.
wine as an investment asset through platforms that used to not be accessible to individual investors. They were only accessible to wealthy or at least accredited investors. And I believe the access to this type of tool will be available to everyone. We will be used to it. It will be table stakes in the future, but who's telling how long that's going to take?
I've created the Safe Money Blueprint. This is the same strategy that thousands of my clients have used to feel secure about their financial future. And you can get it free at healthymoneyhappylife.com/blueprint. Right, right. Well, what I like about it is the protection and equals the performance, the way that you guys talk about that. And
Yeah,
because in the world right now, everybody needs to pay attention because in 1 second it can be gone. And
no,
you got to keep watching, keep awake because there's a lot of vulnerability and things that are moving really fast. And we don't have AI brains. I don't want an AI brain, but I could
yeah,
use one if I want to,
yeah.
play in that world. And
I certainly don't have an AI brain either. You know what I mean? I use tools, right? I don't have time I spend most of my time talking to customers and getting the message out on behalf of financial brands to try to bring customers to these solutions. And to some extent, you could say that that's biased. But I would absolutely have to say, like, I only work on products, particularly within fintech and investing, that I've used myself. Um, and I don't believe in growing an audience if the product doesn't work. And it's not because products have to be perfect all the time. It's just, especially within financial services, right? Like we have a standard for how we communicate to individuals. And without really understanding the ins and outs of something and being willing to use it yourself, I would never really invest in the journey of trying to grow a product set. So the protection equals performance thing has kind of become a motto to us because I get asked all the time, in today's landscape, in today's economy, like should investors really be looking for performance or should they be looking more towards protection? And I look at them as one and the same. If you can avoid declines,
Right.
in double digit numbers, double digit percentages, you're enhancing performance. It's just people aren't wired to think that way. Imagine, people see minus signs and feel upset, but imagine if your peer is down 18% year over year, and you're down 4%.
Right.
Like that is performance. It's just that you're not seeing it the way you want to see it quite yet, but
Right.
over the course of the long term, you're really going to see it. Huge
Right.
returns.
Right. Right. And that's such a good point because what I found is so much emotion around money that, I've spent more time coaching people around their money than filling out applications because, well, my husband always banked at that bank and I don't want to move my money and
Right.
everybody gets stuck.
Right.
And the older you
Hopefully
get, the
it's
more
not,
stuck. Right.
hopefully it's not Signature Bank or
Right.
any of those guys.
Well, right now, as of right now at this date, 4 or 5 banks that have already, the value, the value of
Yeah,
it
it's
is
tough.
already past 2008.
Yeah.
Right? The value and of 27 banks, that was just the last stat I heard. It's probably different by now, but
Yeah.
it's a lot worse than people think. And so you got to get ahead of the game. And what I really like about iFlip is you guys are helping the everyday people, not just the
Yeah.
Wall Street banker guys that know how to
No.
manipulate it. And that's for the people and something that can be accessible to people. And
Yeah.
right,
I couldn't agree with that premise more. Like iFlip customers are small business owners.
right,
They're professionals. They're people who are nearing retirement, and they're people who are interested in starting out their journey with a much more intelligent version of what they may or may not have even been taught. And we're finding out that a lot of young people, and when I say finding out, through research, right, through real research, we're finding out that a lot of young people have not been given a financial education the way that older groups have. And some of that's good
right,
and some of that's bad.
right,
And there are a lot of characteristics that are associated with millennial audiences that are actually really important and good. They pay a tremendous amount of attention to products and platforms and how
right.
they perform and how much they cost. And so they are discerning in those decisions. But when you talk about, the people and the emotion and the how hard it is to attain and protect wealth, you could also think about it this way. We've talked about performance and protection. Well, what about the idea of the fact that you may need your money sooner than you
That's
expected,
right. Yep.
right? So it's not only that we're all making it to this finish line. What about the fact that we don't believe that anybody, any American, right, should ever have to tolerate being down so much so that they would not be able to make a decision in the best interest of their family because they can't actually access their capital without taking a bath.
Right.
And so no one knows if they need to pay for an unexpected expense. Nobody knows when a medical bill is going to creep up, and who is to say that a person shouldn't have the right to make a life change, right?
Right. Right.
With the money that they've invested and saved. And so by protecting your investments, we're not only trying to achieve better performance over time, we're also trying to say you can sleep better at night because you shouldn't ever experience a time when you're down so much that you can't actually make the decision you want because it's untouchable, or you have to put off retirement for a while because a recession happened.
Exactly. And that's exactly what I talk to people in healthy money strategies is it because when you're 20, you never think you're going to die, right? Right. And
Right.
then you don't, I couldn't imagine like, what is it like when you're 40? And then when you're 40, what's it like when you're 60? And each age, because I'm, a few decades down the road here than you, is that each age has a specific thing that people should pay attention to. And the
Yeah.
three of them I found were protection of assets, catastrophic illness, and
Yeah.
probate and living trust having the right paperwork.
Yeah.
But people need to take the time to learn about this. Again, send them over to iFlip, right?
Yeah.
iFlip.com/money911 and
Yep.
get the information and learn and take an hour off on a Sunday and start learning about this. When you're empowered around your own money, and you don't have somebody, you understand it. It's empowering. It makes you feel good about it. And
Yeah.
right. And
100%. I mean, it is empowering. It is. And if
yeah,
in addition to going to iflipinvest.com, there's a tremendous amount of video content that iFlip has released on YouTube and on social in general that talks about the philosophy that we've kind of gone over today. But in addition to that, you can sort of hear customers, right, in their own
right,
words, talking about the product and what it has given them from the
yeah,
standpoint of empowerment
right.
and peace of mind. That can be the most beneficial thing that people achieve from this, even more so than increasing their wealth, is just feeling like they've got it taken care of, feeling
Yes,
like they're on top of it, and being able to really
yes.
to tell their families that.
Hey, that's a cherry on the top. The peace of mind is the real value because that's what you carry with you all the time.
Right.
And and really, that just caps it off. Now we're going to be doing some more shows. I want to make sure people subscribe and stay tuned. Leave reviews too, but do listen because we're going to have more shows, more conversations. Break this open so people can learn. Go to the site, watch the videos, get all the information you can. And Rob, any other final parting words you want to leave with everybody?
For sure. I would just say, everyone needs to take all of the inputs that are coming at them from the financial news, from their relatives, from their friends, and just kind of take a deep breath and get a little bit smarter. Take a second look at what you're doing with your investments. It's not, no one is trying to time the market, and no one is trying to predict anything. If you can get smart earlier in your career, you're going to do better over time. And if you're a little bit later and you're sort of upset with how things have happened over the last 10, 5, 2 years, it's definitely time to take a second look because we're in the middle of it. And so iFlip is a great place to start.
That's great. Hey, you've been fabulous. We're really glad you guys came around and everybody pay attention to iFlip because they're on the cutting edge, the top of the wave, right? Hang 10, as they
There
say,
you go.
right? You see his surfboard in the back. He's smart.
There you go.
Thanks, Rob. I really been a pleasure having you on today. Thank you.
Thanks so much. It's been a blast.
All right. There's so much to learn about healthy money. I hope today's discussion brings you one step closer to securing and protecting your future. So you can get started on the right foot, go to meetwithkrismeller.com and schedule your free financial fitness strategy session. Thank you for listening, and please subscribe to Money 911 so you don't miss our next episode, which includes health, wealth, and peace of mind.
Lives inside of